we also welcome on board Vimal Kejriwal, the MD and CEO at KEC International, joining in on the show right now for a chat. Vimal, hi, good morning. Good to have you on the show. Let's try and understand these new orders that you've bagged. What's the breakup of the order wins? What's the margin profile of the new order, etc. And, of course, the completion timeline as well.
Good morning. So we have announced orders of around 1,000 crores, and of which roughly around 60% are in the railways conventional areas, which is after a long time that we have been able to get orders in the conventional railway piece. And around 30% are on the civil, and the balance are divided between our America subsidiary SAE and cables. That's the broad breakup of the orders announcement.
Kejriwal, good morning. I wanted to also talk about your margins because the Q3 did see a margin impact of roughly 200 basis points, and that was largely on account of raw material headwinds. Do you think that the situation is likely to worsen, or have you managed to pass on the price hikes and assuage the impact?
So the situation continues to be bad. The headwinds continue the way they are. In fact, they have been worsened by the war. However, with our long-term duration of the projects and all that, we have been able to, sort of manage our revenues and pushing back some of the revenues where we need to buy, let's say steel and aluminum, etc. So I don't think we'll have a major depreciation in the margins as compared to Q3, but the pressure continues, and I think the pressure will continue in Q1 also the way things are. However, the good part is we have a large order book. So I think revenue growth next year we should not be a challenge.
Just picking up from that point, what is your total order book right now, and what do you expect to close the year with?
So let me start with the order intake. This year we have announced orders of around 16,200 crores, which is roughly 35% more than what we did last year. That takes our order book to around 24,500 crores broadly, and another 4,500 crores of L1. So we'll probably end the year with around 29,000 crores of business in hand for next year.
You had also scaled back the guidance for FY22 from 10 to 15% revenue growth to about 8%. I know you spoke of these orders coming in and that your revenue will pick up, but just give us a sense as to how you expect to close FY23 and which are some of the key geographies as well that you're seeing these orders coming in.
So I'm happy you not ask me about FY22 because that is going to be a problem. But FY23, I think we are very clear that we should do at least a 15% revenue growth minimum, because with the order book which we will have to deliver those projects, and that would ensure our revenue growth.
Following the acquisition of Spur Infrastructure, you said that you were planning to bid for some global contracts. You were very bullish about the civil segment. Has anything materialized on that front with respect to global contracts?
So we actually have got three areas where we want to go international. One is oil and gas, which is Spur. Then we have civil, and we have also got railways. So we have started bidding for a few projects, both in railways and civil. In fact, in civil, we were L1 in a couple of projects, which unfortunately did not get materialized, but we are hopeful of getting some of them. Oil and gas is a little bit nascent for the international, so we are, getting into joint ventures. We are tying up everything. So my best guess is next year we will definitely have revenues flowing in from both railways and civil international. However, oil and gas, we may get orders. I am not very sure whether we'll be able to get revenues next year from the international market. But otherwise, we are doing very well on oil and gas.
And finally, the net borrowing as well has increased to about 4,850 crore rupees at the end of Q3. What is the trend that you foresee?
So Q4 should be slightly better than Q3. Q3 we had some issues with some clients who are delaying payments, etc. for whatever reason. But I think Q4 most of those issues have got resolved. So the borrowing should start coming down. Interest cost should be okay with us, as a percentage of revenue. So I think we are generally okay. We would have been happier with a slightly lower borrowing, but I think nothing much to worry about.
That's Mr. Kejriwal of KEC, confident about a 15% growth in FY23, but there will be a few headwinds in FY22 that they have acknowledged, which is why they've scaled back their revenue guidance and also flagging off the rising costs hurting their margins.